Hey everyone, hope you're doing well. This is the Deep Dive. My name's Drew Creekmer, and I am the Director of Advisory Services here at Creekmer Wealth. And I'm joined, as always, by John Creekmer, our founder and Senior Wealth Advisor. And John, there's a lot going on in the world today, and we're going to kind of walk through things from an investing and economic standpoint, and kind of dig into just what our thoughts are at this moment in time. But before we do that, how you doing? How you navigating this heat wave that's running through the U.S.?
I'll tell you what, we were under a heat dome in central Illinois, and so all of a sudden summer came. We got hot real fast. I guess yesterday was the first official day of summer, and so over the weekend I was working outside, and then I was just kind of laying in my lounge chair, and it's one of those things where you should apply sunscreen because if you don't, you're going to get injured and hurt and all burnt, and then people are telling you, hey, you're going to get burnt. You do something about it, John, and so then I go and I sit in my chair. I fell asleep and
Oh no.
the sun was there, and finally I woke up and I was hot. Now I have this red face now, and it was always warning signs. I probably should have done something differently, and I didn't, and then I felt the pain from it. And I think a lot of times that even happens as far as in the world, as far as different events that happen, and it's like, oh, it's a warning sign. You should be aware of this, and if you don't take some actions, it's going to affect you negatively on your portfolio. And I think we're right in the middle of one of those that happened over the weekend too.
Yeah, that we are. And as you all are probably aware, the United States had some military intervention in the country of Iran over the weekend, and that's led to just a lot of commentary and thoughts about, how does this affect the economy and the markets and the oil market, and how does that affect bigger picture more directly for all of you, your personal finances, and your retirement income plans. And so, John, whenever we're walking through these big geopolitical events, what's kind of the one thing that you
Yeah.
always recommend people keep in mind?
Well, you have to separate a little bit of your personal beliefs versus your financial actions. And so oftentimes we look at an event like this and we get distracted by that should have been done, it should not have been done. I agree, I disagree, I strongly agree, I strongly disagree, or I mostly agree with all the decisions. This one here I can't stand because of these reasons. All of that it matters to you personally, but it should not matter or impact the decisions that you make financially. And I've seen so many folks over the years, Drew, where they make financial decisions that really have a negative impact on them financially and on them realizing their goals because they're reacting from a political belief system or a certain worldview that really is disconnected from what the event that actually happened. And so we need to take a step back and say, okay, let's look at the actions that happen and then what are the possible outcomes from those actions. So it doesn't matter what it is. It could be tariffs that we saw back in early April, and some people made emotional decisions based upon that hurt them financially. Or it could be an event such as a strike, or it could be a war event. Whatever it is, those all potentially could have negative impacts. You got to pretty much decide. I'm going to take myself out of that decision, and I'm just going to say what are the possible outcomes from this, and then make financial decisions from there.
Right, right. And John, once you take a step back and look at the data and think through the outcomes, are you endorsing whole scale changes to people's situations, or is it more just small tweaks here or there as it makes sense and is appropriate for each individual situation as you walk through that unique moment in time?
It's so rare that we'd ever recommend making wholesale changes across the board. And typically, whenever we do in the past, Drew, every one of those handful of situations is because there was a personal shock to the system caused by an unplanned event, which has dire consequences in the short term that we had to respond appropriately, almost like an ER visit, and then they needed some
Right,
triage done. However, in cases like this, you don't want to make a lot of decisions. You do want to evaluate and say, are there any small tweaks I need to make on my personal decisions to put me in a better position? And Drew, it's always driven by where you're at in proximity to needing to access funds
right.
or needing to have a change in life stage. That's when you would need to make some adjustments. And so I would say it's usually small adjustments, small tweaks along the way that do have significant impact long term on the portfolios.
Right, right. And that makes a ton of sense. And folks, if you're thinking through just your situation, what's going on in the world around us right now, and you just have questions, I'd really encourage you to reach out to your advisor. Our team is fully prepped and prepared to walk you through what those maybe one, two, or three unique small tweaks you need to make, or maybe it's no changes at all. But we're here as a resource to help you make that decision as you need to. Now, John, let's hop into though and just talk about just big picture how portfolios are currently positioned. I believe from an investment committee level, we're walking into this moment in time where there's some uncertainty in a really good position. So why don't you just kind of walk us through the current positioning and how we're looking at the days and weeks ahead of us?
That's it. We made a number of strong strategic changes, and as all of you will know from our past discussions, and if you want a refresher on this, definitely let your advisors know, and maybe even put a link as far as in this email, as far as on our investing philosophy and our technical analysis of how we go about doing that. But if you remember, we saw the markets become extremely overvalued. As far as in the fall of last year, we increased a high level cash position. And we were able to protect ourselves all through February, March, and April when the market dropped 20% from the high. Then we were able to reinitiate positions and have a strong return on the bounce back, a lot lower risk. And so right now, Drew, we're sitting mostly pretty much invested fully. Growth portfolio, growth and income portfolio, individual stocks, income stocks. We're mostly fully invested and had some tremendous successes this year in all those portfolios and in the positions of the individual positions, some strong gains. I encourage you to think through your allocations there. As far as on our core positions, as far as an exchange traded funds, indexes like the S&P 500, the NASDAQ, the Dow Jones, or even IXUS, which is international minus US, we're sitting at a point of being probably the most invested we've been over the last year. And we're looking to see things increase there. We actually have a pretty strong position outside of the U.S., which, as you know, historically is kind of rare. But we have seen outperformance of non-U.S. stocks, especially in developed countries, versus the U.S. to the United States stock market. And so we are seeing over allocation there. We'll probably continue to see that, maybe a little bit higher as we move forward. Growth stocks performing well, so we have a little over allocation in the S&P 500 and the NASDAQ. And so things are positioned very well. We're seeing great traction. And across the board, very pleased with the positioning where we're at right now. We do see opportunities heading into the second half of this year. A little bit on the upside, so we know the NASDAQ, or the S&P 500. We're sitting about 2 percentage points from the next ceiling. If something happens in the short term, if we see oil prices spike, that might cause a little pullback on the S&P 500. If so, we could see us reallocating and taking a more aggressive position. Really to kind of see a nice uptick toward the end of the year. One of the reminders for everybody, Drew, is that stock prices move up or down solely based upon the earnings of companies currently, but most importantly, what will the earnings of the companies be 3 months, 6 months, and 12 months down the line? If we're looking like the events of the day are going to hurt short-term earnings, you're going to see the stock market pull back. If it looks like the events of the day have no impact or muted impact, well, then we're going to see stocks moving higher. We're actually in a strong bullish position. We believe the stocks are going to move higher for the rest of this year.
Yeah, yeah, that we do, and we'll keep a close eye, obviously, on earnings and see if any of the current events will potentially impact those. But as John said, we're positioned very well. Performance has been very strong so far this year. Now, guys, if you have any questions about how you're invested or just big picture, the impact on your personal financial plan, definitely reach out to your advisor. They'll be more than happy to walk you through those decision points and just your current status and tracking on your financial life. But John, that's all the time we have, so we'll go ahead and wrap up. What's one thought that you have for everyone that you'd send us out into the week with?
I'll tell you what, always, regardless of the environment that we're in and what's happening up in the media of the news, always make sure you know your goal objectives and your timelines, and that will really put in place what steps you need to make sure you accomplish your goals.
Absolutely. Love it. Well, guys, thanks for the time. So if you have any questions, please reach out. Our team is ready and standing by to help you in any way that we can. And we'll talk to you all soon.